Well, hello and welcome to this week's update here on YouTube. So let's have a look at what we have got up to during the week. Well, firstly, let's go and have a look at what the market is doing. First place we want to start is the SPX. We've got a bullish opening range. Okay, so we set that on the first trading day of the month, which is the 1st of July on Friday, and we're in bullish opening range mode. Okay, we got above the 3829 level that we spoke about, so we're in bullish opening range mode for the SPX. We got above the 21 EMA and we've had a little bit of a move up. Federal Reserve said they wouldn't raise rates by one whole percentage point, rather 0.75%. So they sort of put the 1% rate rise out of the question, and they also added 390,000 jobs recently, so it shows the job market is relatively strong and the market liked that, so it had a bit of a move up. But this week is a very important week. We've got CPI coming out an hour before the market opens on Wednesday. Everyone's talking about inflation. It's impacting everyone, particularly the people that can least afford it. And this is what happens just about always with poor government money management, poor government decisions, overreach by government, excessive money printing, all the rest of it, excessive debt, you name it, the government's caused this. And who does it always impact? The average person. So right now, the average person is being crushed by inflation at 40-year highs, and it's actually much higher than what they tell us, and I've spoken about that many times, and that's going to be a central figure for this week, right? So CPI, they're going to be watching that very carefully. The Beige Book, which comes out at 2 p.m. on Wednesday in the Treasury statement. The Beige Book is something that's produced roughly 2 weeks before the monetary policy meeting of the Federal Reserve. Gives you a bit of an idea as to what they're thinking with interest rates and a bit of an idea of what may happen in that meeting. So that's something that the markets will be watching as well. Producer Price Index, that's something that could move the markets because it gives you an idea of where consumer price index will go as well. If that's extremely high, it normally gets passed on. And then retail sales and industrial production is something that, and consumer sentiment, that the markets will be watching. So quite a bit happening, right? The Fed balance sheet on Thursday, a lot going on, which could really tip this market one way or another. But right now, looking at it, well, we're just above the 21. It's not overly bullish, but short-term bullish opening range mode. We look at the combined put-call ratio. We can see right now the 10-day moving average is 0.95. Between 0.8 and 0.95 is neutral. Something below 0.75 is bearish, and something 1 or certainly above 0.96 or higher, closer to 1, is bullish. So we're closer to bullish than anything else, but technically neutral. Our trend reading, the trend reading is the most accurate overbought, oversold reading on the stock market, much more accurate than RSI. Most of the time it is neutral, but when it does flash signals, you need to be mindful of it. Made a lot of money by doing that. Something that's under 0.5 is bearish. 90% of the time, if it's under 0.5, which it's not now, but if it is under 0.5, it's bearish. 90% of the time, you'll see a move down over the next 1 to 3 days. When it's above 2, which obviously it isn't now, that would be bullish. 90% of the time, over the next 1 to 3 days, you will see the markets move higher. But right now, that's neutral as well. The skew, perceived risk of a 2 standard deviation move or more down in the market, that is not on the cards. Why? Because the skew is at 118. Something between 115 and 135 is neutral, and that's where we are right now. However, if it does get below 115, then it's bullish. And that's definitely something that could happen. So we're keeping an eye on that. But a lot of neutral readings. The SPX put-call ratio, 1.45. Something under 1.75 is bearish. So we're certainly bearish right now on the SPX put-call ratio. And this is excess of call buying is what that means. And above 2.75 is bullish. So that is a negative reading. And the amount of stocks above their 50-day moving average is below 50%, so that's negative as well. Now, a couple of other things that we do look at as well to get an idea of market internals, in addition to those things that I've just shown you, is what are junk bonds doing, the risk appetite of the market. Are they in a downtrend, and obviously they are, right? We use these 5 moving averages, the 89, 55, 34, 21, and 89, all based on Fibonacci numbers, missing out the 13. So when they're stacked in that order, 89 on top, 8 on the bottom, that's a downtrend, right? So could be a double bottom here, right? But certainly right now it's bearish. High yield bonds, that's bearish as well. Could be a double bottom there also. And transports are bearish right now, stacked bearishly. And the reason we look at transport, so they give you an idea, a couple of weeks to a couple of months out where the market is likely to go. So that right now is bearish as well. So we certainly have some bearish indicators, but we've got a lot of neutral and a couple of bullish. So out of the 10 that we look at, we don't have a clear direction one way or another. Okay, so what does that mean? That means watch what's really moving the markets, which is inflation and the Fed. And they'll be on display this week. So keep a close eye on that because things could start moving. And once we do get a clear direction, we will start loading up positions in that direction. But right now we don't. So I want to be very conservative with what I do right now. And one position that I'm looking to get into is on Riot. Now, Riot, I have a series of calculations that I do to work out the intrinsic or real value of a stock. And right now, Riot's real or intrinsic value is $14.51. Now, obviously, this stock is a Bitcoin mining stock, and with a huge move down in Bitcoin, you would expect to see the stock move down as well. And that's obviously what has happened. So I'll just show you the actual stock there. So we can see that it has had a significant move down, right? From around over 45 down to $5.46. It had a little bit of a move there to get above the 21 EMA, but nothing significant. So it is undervalued, right? I think the real value is around $14.51. That's based on my calculations. And if you do start to see a move up in Bitcoin, I mean, it's above 21,000 as I'm recording this. So it's still above 20. We could still see further downside, right? And this is normal in any new technology. This happens. It's called the shakeout phase. You look at any S-curve adoption of a new technology, and you will always get a shakeout phase. It happened with the internet when you get the dot-com crash. Same thing, only the strong survive. Regulation comes in, and then those companies, once the shakeout phase has occurred, you start to see them move up dramatically, right? But that's what's going on right now with crypto. Okay, there's a lot of cryptos that will not survive. So we want to be in the only ones that have some real value moving forward. I believe Bitcoin is one of them. And to have some allocation, not a huge amount, but some allocation to Bitcoin now, just a small amount, right? 1% would probably be under what I would normally do, 5%, but 1% is okay, right? Allocating 1%, nothing wrong with that, especially at these levels, and closer to 5%. But again, not your whole life savings in this, but definitely something at these levels you could have a little bit allocated from your portfolio. But anyway, having said all that, this is a particular idea that I'm looking at now. One that we got into last week, just for those people that probably want to know about that. One of them was GoGo. Now, this one right now, we got in at $87 for our put spread. $87 a contract. Right now it's worth $80 a contract, so it hasn't really changed much. But if it does close above 80, I would get out of the trade, right? So that's what we're looking at there. Sort of sitting just a slight loss, but nothing significant. Our Apple bear trade that we had on, it closed above 143.49. It triggered our alert that we set. So close this out now, right? We're out of the trade. We didn't get stopped out. We allowed ourselves a little bit more room on the stop, but I'll just close it out now. Looking at market flow analysis here, yes, the downtrend was intact when we had lower high, lower high, lower high, right? Another lower high. But once it broke above that, it shows a change in direction. Moved above the 50, moved above that most recent active high. I just closed the trade out. Right, so we took a loss on Apple, but we've had such an amazing string of winning trades. We're sitting at about 86% win rate right now, and our winners are much more, asymmetrically skewed in our favor, right? Where they're much higher profits than our losses that we're taking. So, 86% return, but that one was a losing trade, right? So close out of Apple now, even though the stop hasn't been triggered, just based on price action. So Riot, going back to that, being very conservative here, what I'm going to do is I'm going to buy 100 shares. Okay, set up a covered call. Sean, what's a covered call? It's where you buy 100 shares and you sell one option against those 100 shares. So the one option call option you're selling is covered by the 100 shares that you own. One option controls 100 shares. So in this particular case, I'm going to set up an in-the-money covered call here. Again, it's just an idea, something you could look at, just something I'm looking at. And it's in the money, this one. Okay, so when you sell the 5-strike call with every 100 shares that you own, what you're saying is, I'm happy to sell the stock at that strike price, $5. But Sean, why on earth would you want to sell the stock for less than what you paid for it? You're paying $5.46 and you're going to sell it for $5. How does that make sense? Well, we're being very conservative right now because anything could happen in this market. Okay, we know how volatile it is right now. We know all the major news that's coming out this week. We don't want to be going into very aggressive trades. So this particular one right now, if I sell the 5 call for the 19th of August expiry, I can get $1.23 per share, or $123 for the one call option contract that I'm selling against the 100 shares that I own. So this is for the next 40 days. My break even would be what I paid for the stock, $5.46, minus the call premium, $1.23. $4.23 is my cost basis or my break even price. Now, only one of two things can happen come expiry, which is 40 days from now, right? 19th of August. It can be above $5 or it can be below $5. Can't do anything else. So if it's above $5, what happens? Well, you make money is what happens. Okay, so $5 is what you're selling it for. Your break even is $4.23, taking into account the call premium you're getting day one, right, for setting up the trade. So that would leave you with $77 of profit per share. Okay, per 100 shares that you own. Okay, so in this case, if we divide the $77, okay, by the 546 or 77 cents by $5.46, same thing, it would give you a 14.1% return. Okay, so a 14.1% return in 40 days is pretty incredible. Okay, 95% of retirement accounts, professionally managed, this year in 2022 have negative returns, 3 to 5% negative returns. They've lost money. So to be able to get into returns or trades like this makes some sense. But again, it's just an idea, something I'm looking at. Now, if it finishes below $5, what happens? Well, you keep the premium, the 123, you keep all of it, and then you can sell another lot of call options against those 100 shares in September and October and November if you choose to, right? Depending on what happens with the stock price. So that's a very conservative trade. So why is it conservative, Sean? Well, the stock has to fall from $5.46 to below $4.23 for me to be losing any money. So it has 22.5% downside protection. So think about this. If someone came to you and said, look, I'll show you an investment that over the next 40 days will generate you a 14.1% return, even if the stock price doesn't move. It doesn't have to move 1 cent, and you'll make a 14.1% return in 40 days. Sounds pretty good. In addition to that, the position has 22.5% downside protection built into the trade. Sounds like a pretty good deal. Now, when you're trading, that's about as good as it gets. It doesn't really get much better than that. So that is a potential idea that you could look to get into. Sean, how would I do it? How would I actually set it up? Well, let me show you. Let me know. Send an email to support@cashflowoptions.com.au if you like me showing you how to do this in Interactive Brokers, for example, right, in a brokerage account. If you're quite happy to do it yourself, that's fine. Easier for me, obviously. But just let me know there. I like the feedback. So you type in Riot, click on Enter, then click on Stock Smart. Okay, this is one way. There's lots of different ways of doing it. You can right-click on Riot, go to Trading Tool, go to Option Trader. Okay. You then click on Strategy Builder, Add Stock, right? Add 100 shares of Riot. Then we make sure we've chosen the 19th of August, okay, 40 days from now. We go down to the 5 strike, calls on the left, puts on the right, so we're going to calls, and we click on bid. So we click on the bid because we want to sell. On the ask, you'd be buying. We don't want to do that. We want to click on the bid, so sell, right? And there it is there. There's your covered call. Now, from our calculations, we can see that the cost basis or break even is $4.23. The amount you're paying for the stock minus the call premium, $4.23, right? So you'd go back here, you'd click on this, and you just type that in, $4.23. Okay, boom, there it is, right? So there's the actual trade done. You would then transmit, and you would you're done, right? So there you go. So that's how that works, and there's the actual trade sitting there, buy right, right? So you're buying the stock and you're writing the call option, selling it. Okay? So there it is right there. That's what it looks like. So let me know if that was helpful for you and you got something out of that. We'll talk to you again next week. Thanks so much for listening. My name's Sean Allison. All the best. Bye for now.